Studio microphone, podcast script. Catalyst Watch, October 20th to 24th, 2025. Welcome to Catalyst Watch, your weekly macro and market intelligence briefing. I'm your host, and today we're breaking down the key drivers for the week of October 20th through the 24th. This week is a triple threat: inflation data, earnings season, and Fed communications. Each one has the power to move markets, and together, they form a volatile cocktail of risk and opportunity. Let's get into it. Segment 1. Inflation data. CPI takes center stage. The Consumer Price Index is the headline macro event. It's the final inflation read before the Fed's next policy meeting, and it will shape rate expectations and risk appetite across asset classes. A cooler CPI supports the soft landing narrative, easing pressure on yields and allowing equity multiples to expand, especially in long-duration tech. A hot CPI reignites rate fears, compresses valuations, and triggers defensive rotations. Context matters. With parts of the government still in shutdown, the cadence of economic data has been disrupted. That makes CPI's signal louder, its impact sharper. Segment 2. Earnings, banks and big tech in focus. Next up, earnings season, with banks and megacap tech leading the charge. Banks set the tone for credit quality and net interest margins. Strong prints last week helped stabilize indices. If that trend continues, it could broaden market breadth. Tech leadership risk, AI and semiconductor dispersion. Think NVIDIA versus Intel, plus uncertainty around enterprise IT and tariffs, make guidance especially sensitive. Surprises here can swing the Nasdaq and factor spread dramatically. Segment 3. Fed Speak and Beige Book Read-Through. The third catalyst is Fed communication, including the Beige Book. If CPI surprises, Fed commentary will either reinforce or counter the market's interpretation. The last Beige Book showed little change in aggregate activity, which means CPI's delta this week will be even more impactful. Watch for any nuance on labor, pricing, and regional activity. These will shape expectations for the Fed's next move and ripple through cyclicals, financials, and growth. Segment 4. Technical triggers. What to watch. Catalysts are only half the story. Let's talk technical confirmation, the price action that validates the narrative. S&P 500, SPX. Watch the 50 and 200-day moving averages. A break above the 50-day with expanding volume confirms momentum. Rejection at the 200-day suggests exhaustion. RSI. A benign CPI should push RSI into the 55 to 65 bull range. A hot CPI likely drags it below 45. MACD. Look for a bullish cross with histogram expansion on a cool CPI. Acceleration lower on a hot print. Nasdaq 100, NDX. Breadth thrust. If more than 50% of components climb above their 50-day MA post-earnings, that's risk-on confirmation. Gap behavior. Earnings-driven gaps that hold into the close and follow through the next day signal institutional accumulation. Volatility in credit. VIX, sub 14 and falling equals risk-on. A spike above 20 on CPI day equals risk-off. Term structure. Backwardation after CPI is a red flag for near-term drawdowns. IG spreads. Tightening confirms credit stability. Widening by 5 to 10 BPS signals risk-off. Rates and factors. Yield curve slope. 10s minus 2s a bear-steepener on hot CPI pressures growth. A bull-steepener on cool CPI rotates flows into cyclicals and financials. High beta versus low vol. Ratio charts like SPHB/SPLV confirm whether risk appetite is broadening or retreating. Volume and VWAP. CPI session volume above 1.3 times the 20-day average confirms conviction. Anchored VWAP from CPI day. Acceptance above is bullish. Rejection below is bearish. Segment 5. Scenario ladders. What happens if? Let's map out the mechanical scenarios for the week. Scenario A. CPI cools or inline. Expectation. Yields dip. VIX slides. Breadth improves. Triggers. SPX closes above 50 DMA with RSI greater than 55. NDX breadth 50%. VIX less than 15 in contango. Actions. Favor cyclicals and quality growth. Scaling on pullbacks to VWAP. Scenario B, CPI hot. Expectation, yields jump, VIX greater than 20, defensives bid. Triggers, SPX rejects 200 DMA, RSI less than 45, VIX backwardation persists, IG spreads widen. Actions, reduce beta, rotate to defensives, watch for mean reversion once VIX greater than 22. Scenario C, earnings beat but cautious guidance. Expectation, initial rally fades, leadership narrows. Triggers, gap and crap in megacaps, bread stalls less than 45%, above 50 DMA. Actions, fade strength in overbought leaders, equal weight indices underperform. Segment 6, weekly checklist. Here's your trader's checklist for the week. Pre-CPI, map SPX and NDX 50/200 DMAs, set alerts, anchor VWAP. On CPI release, track VIX spike, term structure, and 2S10S slope, log volume. Post-earnings, confirm gap holds and breadth thrust. Monitor IG spreads and XLF relative strength. End of week, validate RSI regime shifts and MECD follow-through. Reassess scenario ladder. Closing thoughts. To wrap up, CPI is the final inflation checkpoint before the Fed meets, giving it outsized influence this week. Strong bank results have steadied indices, but megacap earnings and Fed commentary will determine whether that resilience broadens or cracks. Stay sharp, stay tactical, and remember, price confirms narrative. Thanks for tuning in to Catalyst Watch. We'll be back next week with another breakdown of the forces shaping your edge in the markets.